Hello friends at YouTube, how are you? My name is Mike. This channel is Health and Wealth. Thanks for joining me today on another edition of MSTY versus Mr. I want to take a closer look over the last couple of months to see which one would have paid you more money if you had your money in either MSTY, which is the ETF symbol, or MSTR, which is the stock symbol for strategy. This is one of those day-old questions, right? Which one would I have made more money at? And so generally speaking, with the high flyers like MSTY, Coney, and then their underliers, which is Mr., Nvidia, and Coinbase, you are generally able to make more money if you stick your money in the underlying stock. So let's see which one is true for this one. If you're new here, I talk about high yielding distributions. I'm investing myself in these funds, and I'm trying to get to retirement as soon as humanly possible. So if you relate to that, hit the subscribe button down below with a little bell notification to let you know when the live premieres come. Every single one of my videos has a live premiere where we chit chat about the video and how we're doing. Okay, so first things first, I did want to show you my channel here. 6846 subscribers. We're moving on though. Let's look at Mr. MicroStrategy, also known as Strategy, trading at $403.99. In the last 6 months, up 6.57%. MSTY here, let's do 6 months on that as well. At $20.89, down 34% in that same time. Wow, that's not looking good, right? It's not looking good at all. So what I did is I took the drip calculator. I took from this website right here, dividendchannel.com. I went ahead and inputted a couple of important dates here. We can always change it after. But if you want to go, do different tests on this at different times, that's the website. So essentially all you do is you go to the top, type in your symbol, scroll down to the right here, and you can see a little comparison right here. So I did it from April 8th. This is a pretty key date out there in the world. Tariff conversation happened. The world dipped for, a few weeks. And then, actually, I don't like saying a few weeks. Let's go look. Yeah, I mean, all-time highs in January, and then it went down 33%. So yeah, let's call it like 2 months, 3 months it dipped for, right? But April 8th was kind of the bottom of that dip, and then it worked its way back up. So we can see here, Mr. has had an incredible climb of 69%, or $166 since that date. That's pretty insane. Now, MSTY in the same exact time has gone up 21%, right? So we're missing out on 48% of incline. And so, the question is, which one would have been a better investment, Mr. or MSTY? But we're missing something here, which is the distributions that yieldmax has paid its people that are invested in this fund in that same time period. So again, I went to this website. I plugged in from April 8th till July 5th. That's today's date. I'm comparing. I can't even say it now. I can't say it. Let's go. I'm comparing Mr. to MSTY. And I started with $10,000. So that brought up this chart right here. I'll go ahead and make this just a little bit bigger for your viewing pleasure, by the way. Hopefully your viewing pleasure is going really well. If it is, if you can hit the subscribe button for me, I would love to have you. Trying to get to 10,000 people. Speaking of 10,000 people before Christmas. Okay. So I actually want to do it a little bit weird. I want to go from the bottom and work my way up. So the bottom is without drip, which means that you're not letting the system, your brokerage, reinvest the shares in here every time that MSTY pays a dividend or a distribution, okay? So again, both dates starting at the exact time, both ending at the exact time. Half a day market on the 3rd of July here. Your starting price point as of April 8th on Mr. was $237, but it ended at $403. That's pretty darn good, that's for sure. With MSTY, it started at $17.20. It had a really big dip there, and it's ending at $20.89. So in that time, you would obviously not collect any distributions. I guess it'd be dividends, right, if Mr. paid some, but they don't. And then you collect $6.42 with MSTY. That's pretty good. So total return 69% from Mr. We looked at that on that chart, bang on. And then 58%, right? Even though on the chart, let me just go back here. Remember, we went from the 8th here all the way till now. It says 21%. So if we go back to that comparison, it tells us it's 58%. Why? It's because you got a distribution, I think 3 or 4 times. We'll take a look at those distributions in just a bit here. So right now, on the non-drip, it would have made more money. You would have made more money if you invested in Mr. And this is the likely case for most of the ETFs that I invest in with the bigger name companies out there. But Mr. you would have made $6,978. With MSTY, you made $5,877. Pretty good. Pretty good. Not too far off, right? But, you know, it's like $1,100 off. $1,101 off. So there you go. Let's go up to the drip version now. This is letting your brokerage automatically reinvest your distributions back in. Just so you know, I don't have drip on MSTY, but what I do is I reinvest them on my own. There's not really any like disadvantage to doing that. What's nice about yieldmax is it pays out the distribution so fast after they announce it and right after the X date. So an example most of the time is that they announce the distributions on Wednesday, the X distribution date's Thursday, there's an automatic decline in share price, and then on Friday you get paid. Most people. So that's pretty nice, right? You don't see that very often out there. Usually it's a week or two later you get paid. So let's look at the top one here. Same dates, right? Same share prices down below's example there. Starting shares was 42, and this is a massive difference, right? So if you're dripping, you're actually buying shares, right? So your starting shares was 581, but end shares was 780. That's incredible. And that same distribution of $6.42 in distributions. Here's where the big difference is. On the below example, you had a 58% return, and then on the top up here, total return, sorry, on the top one with drip, it increased to 63% because you were adding money back into the fund to build up and be able to pay you more money on the next distribution. So annualized gain is chalked up to 296%, same as the below example for Mr. But for MSTY, 267% compared to 249%. So you see it made a massive difference in income here. And so the chart up here, blue is MSTY and the black line is Mr. But I can read that out because I know a bunch of you just listen in to these instead of watching. So end investment for Mr. again, 16,978, and then end investment for MSTY, 16,301. So instead of it being $1,100 off, if you dripped, you would have been roughly $677, give or take on the 77 there. But let's call it $600 off. That's a big change, right? You've made yourself an extra roughly $500 just by using drip or reinvesting the shares yourself. I know I have a lot of people here that rebuy on the X distribution date. I don't know where they find that money, but then they replenish that money on the Friday with the money they got from the dividend, the distribution. So I think that's pretty interesting. If we go a little bit further out, so I mean, let's change the date here and let's go back as far as we can. I think it came out around 2024 in like March, but I'm just going to go all the way back here. And that's not going to make a huge difference, but take a look at the difference now. So if you had invested in Mr., which has absolutely exploded over the last year, let's say over the last year, you can see the big incline right around November here. So with drip, if you had done it from day one, Mr. Brought in your 10,000 got all the way up to $56,643, and MSTY went to 41,000. So there's a massive difference. If you do this with all of the ETFs you're invested in, if you're curious, I'm curious, right? To kind of teach you which one was the right one to do, which wasn't. But, you know, for me, I'm in it for the income. I do enjoy the income for sure. I want to be able to afford life later down the road. So I think having a little bit of Misty, Mister, and Bitcoin might be a good play for me. This is not financial advice for you. Obviously, you got to do your own research to understand what's your peak benefit here. What are you wanting to do with your life? What are you wanting to do with your investments? You gotta answer that question. If you can't answer that question, then you should get a financial advisor who's a professional certified human being that can ask you these questions and deep dive into your budget, into your finances, into your income, into all aspects of your life, right? That's the kind of thing that I think about when I invest. I got one more form here for you. This is marketbeat.com. I really enjoy this one. This is like a mystical, magical world. What could happen if all stays the same type thing? Remember, it might not all stay the same. Mister's implied volatility has decreased, but it's since gone back up just a smidgen compared to what it was in previous months. Actually, I have two screens to go with you here. This is the second last one. I think, I know I love this screen personally. There is one small issue with it. There is no every 4-week option. Now, if you didn't know, yieldmax pays their monthly, let's do air quotes, monthly distributors. They pay them every 4 weeks. And what that means is that you get an extra payment each year. You get 13 payments a year. So this, take it with a grain of salt. This number I'm about to show you is a little bit skewed. You actually probably, if everything stayed the same, would make a slight amount more than what we're showing here. But it's not like a massive amount or anything like that, okay? So I said drip, yes. I did number of shares because I'm talking about myself here. I'm trying to get to 500 shares myself. Current price, no annual contribution after the 500 shares. I'm just going to let it drip in this hypothetical world. My interest rate is 15%, so I've left that on there. I put its current annual dividend yield, and I found this over here at yieldmax's website. If you don't know, this changes just about every single day. We'll keep it at 76 for now. And then I said 20 years of investment. I calculated the dividends, and I know their distributions, everybody, before you comment. But if you do comment that they're dividends, I'm going to say thanks for watching the video. So some insane numbers on this thing. That's why I think it's pretty fun to look at. I don't know if I take it super seriously or not here, but it's fun to do. So here I am at 500 shares. My annual dividend is 8,000, but after tax, 6,809. I'd take that, that's for sure. Year 2, it bumps it up to 11,249 in annual. We're almost making $1,000 a month at that point. Not quite. Year 3, we are making over $1,000 a month. Our annual distribution is $18,583. Year 4 is when things get fun. Remember, this entire time, you're hands off. Baby hands off, and you haven't touched it. You just let it drip the whole time. You've been taking money and putting it somewhere else, but you're letting this drip. That's the premise of this. You're at $30,698 in annual income. In year 5 here, you're making $50,711. I mean, I could live off $50,000 a year. That's tax. That's already been taxed, right? I personally wouldn't have to pay any more tax on that. I could definitely live off $30,000 a year after tax for sure. And then, year 6, 83,000, and then year 7's where it hops off here in annual distributions here, $138,389. And then year 10 is where you start making $1 million a year. Again, mystical, magical, probably won't happen, but it could, but it might not, but it might not, right? So are you willing to take that risk with your money? If you had 500 shares, you are probably going to be putting in quite a bit of money to make that happen. That would be roughly, what's that? Well, you know what? I got to do the math, you guys. I need to do the math. 500 shares, and it's times 20, what is it, 78, something like that. So $10,000. $10,390. You put it in, you set it on drip, you never look at it again for the next 5 years. Do you think you would be happy or sad when you open that up? It's tough to say. Just to fill you in what I'm going to be doing, I won't be dripping. As soon as I get to 500, I'm taking that cash, I'm going to put it into something else that I want to buy, and I'm going to build that up. And then, so, once I have my 6 pillars of income, all making $500 a month each, maybe that's when I start to drip each one to really escalate that up there a little bit higher. One last thing, a little bit backwards from my video here, but I wanted to show you yieldmax's website. We saw on that chart that if you had a drip, you would have been pretty similar price to Mr.'s income. Here are all of their distributions right on the website itself, if you haven't seen them. So we did from April 8th until now. So it's I think it's going to be calculating these three distributions right here. It was just over $6, and that's where that website got this information from. So yeah, I think it's an exciting world that we live in. These vehicles of income were not available when I started 4 years ago. I'm really excited to see the future. I hope that the volatility, the implied volatility at Mr. continues to grow over the next coming months here, because I want to see those monster distributions again. Last month we were at $1.23. I'd love to see this thing over $2 every single month. That would make my life better. Would it make yours? I think so. If you enjoyed the video, you're gonna love this one right here. My name is Mike. This channel right here is Health and Wealth. Have a great day. Bye for now.